Before we get into our final thoughts, All-Nighter had a lot to say. We got to catch up. And investors tend to be more ambitious than primary buyers when it comes to getting out there and actually writing offers. And he's doing stuff in Gary, Indiana. And then talking about the economy is an aggregate of all our personal economies. People need to be more financially responsible, in my opinion. It's true. It's true. It add up all the people out there. That's what the economy is. So well said. Rick, you basically have to recalibrate where we thought things were going to go. And I know it's a big ask to kind of predict where things are going to be for this next 6 months to finish out and then the finish out for 2026. But what are you looking at? What are you going to be tracking and what are your thoughts?
I track job growth, wage growth, and population movement along with home prices and mortgage rates. Right now, if I had to put money on it, I would say that we wind up this year very close to where we wound up last year, maybe a little bit positive. I had hoped that we might see as much as a 5 to 10% lift in existing home sales this year. I'm not as optimistic about that after the first quarter as I was going into the year. But I at least don't think we're going to see home sales decline year over year. I think despite the fact that's been the case the first 3 months of the year, I think there's enough pent-up demand and the market conditions are changing enough in favor of buyers that we'll recover from that first quarter and at least not have a year any worse than we had a year ago.
I agree. We have been seeing a floor to the market for the past 4 years now. It's an absolute floor. And so are you seeing any red flags that would make you worry about home values starting to drop precipitously or?
No. We are reading more headlines about home prices declining because that's what reporters like to write about. If you read the story, they're saying, yeah, a third of all metro markets are seeing price declines, and that's probably true. But guess what? That means 2/3 are not. 2/3 are actually seeing prices increase. So I do think we will have regional corrections, and I think we've been seeing that. I don't think it's any surprise. I think inventory levels play a huge role in whether asking prices go up or down. If you have a state with too much inventory, like parts of Texas, parts of Florida, the price is weakening. If you're in Hartford, Connecticut, where there's nothing available for sale, or even Orange County, California, where we are, prices continue to go up. So I think market conditions dictate against a large drop in home prices anytime soon. I don't see a housing market crash, despite all the people on YouTube saying the opposite. But there will be regional corrections, and I think overall, home prices will flatline this year, maybe go up 1% or so.
Yeah, I agree as far as flatline. Here's maybe a controversial thought. Theoretically, a mortgage rate should reflect the risk for the underlying asset, right? Theoretically. And this may sound like redlining, which I would never, ever dare say, but doesn't it seem that certain areas where we're seeing inventory increasing, those multiple layers that you were talking about of potential delinquency, shouldn't mortgage interest rates be higher in those areas than areas where we have higher appreciation and lower inventory? Any thoughts on that? Why a national mortgage rate?
If we really had risk-based pricing in the mortgage industry, you'd be 100% correct. But when the CFPB put its QM rules, its qualified mortgage rules in place after the great crash, it actually made risk-based pricing almost impossible to do. So it took a lot of the risk out of the whole idea of writing mortgages, based largely on the borrower's ability to repay the loan, more so than the risk of the underlying collateral. But no, right now, lenders can't really adjust the price of their mortgage very much to account for risk. So what they've been doing is making it more difficult for people with multiple risk factors to get into home ownership in the first place.
Yeah, and I will tell you too, I'm helping a client who owns 11 single family homes in Arizona. He's selling those 11 and we're going to do a 1031 exchange and some other pieces of the puzzle with that. The appraisers are absolutely just super strict over there in the Phoenix area right now. So, whereas here, not that they're not strict, but it's just a little easier to get things done.
Any market where you've seen prices weaken or decline, the appraisers have got to be really careful. That was one of the mistakes that kind of fueled the bubble that popped back in 2008, was appraisers assuming home prices were going to keep going up 20% a year forever.
Yeah.
So they are watching that. And the other reality is that if you're underwriting these properties correctly, the underlying collateral isn't going to depreciate so very much that if you do have to foreclose on the borrower, you're going to take a massive loss on that property. And if you happen to be in a market with limited inventory, you'll probably be able to sell it at full value, even if the buyer might be able to escape a foreclosure by selling it at full value. So there's a lot about today's market that mitigates a lot of the risk you were talking about, but people do still have to be paying very close attention with their plans to buy and either rent or flip these properties if that's what they're planning to do.
Love it. All right, PD, what do you?
I just have a quick question and something that's just maybe more theoretical, but I think is pretty interesting. And I have no idea if Rick has found a way to come across any kind of measurement or projections. But what I'm thinking about is the silver tsunami, right? The great wealth transfer. And the fact that we've got it's measured right now, estimated $124 trillion worth of wealth. Roughly 40 to 45% of that is real estate. So we now have older Americans who are going to want to be transferring this wealth. Certainly many of them transferring to their children, but some of them just moving out of it. That's what made me keep my mind to it, Christian, is your 11 deals there in Phoenix in that regard. In many cases, what you're going to have is maybe it's transferred to the younger family. They just want to unload the property. They aren't necessarily attached to it emotionally, and it's not necessarily something where they have to squeeze every nickel out of it to make sense of it. So I'm just wondering if you have any thoughts on that and how that might begin loosening up the market as far as maybe some more reasonably priced inventory.
Papa Dan, you asked this in the last 5 minutes of the show.
Yeah,
That's an entire show.
Maybe that's the next show. All right,
He's going to answer, but all-nighter calls it the silver trickle.
That's
good. I like
that's probably
trickle.
more like the answer.
That sounds like a prostate thing, but we'll leave that for a different show. So I've been advocating for either a temporary or permanent adjustment to the capital gains exemption for homeowners.
Here. Yes.
There are literally millions of homeowners across the country who have more than that $500,000 exemption.
Set in 1997.
If all you did was adjust that for inflation, Christian, it'd be up to $1 million, in which case you would have people selling their homes today. And you'd be bringing inventory to market. So that'd be one way of looking at it. But the flip side of that is, because of that, Dennis, we have a lot of people who just said, screw it, I'm going to age in place till I die.
You're right.
And we're not going to have to deal with capital gains at that point. Now it becomes an inheritance issue. We are also seeing a lot of activity in the reverse mortgage space right now, and the people are going to time out there. But absent the capital gains thing, I don't see boomers just in large numbers deciding to exit all at the same time. I think it is more of a trickle, as Christian described it. And there's been a lot of money spent on renovations for homes to make them more livable as people age.
We've been making on it.
So I think that continues, and you see a gradual release of that inventory back into the market.
Yeah.
Good answer. All right, let's wrap this thing up.
It was fun though, right?
Always fun with you guys.
But all the good stuff, there's good stuff throughout, but then there's good stuff at the end, and I want to keep going.
But
I
think
guess
about
that's where I got to have you guys back on.
Whenever everybody's saying goodbye and leaving, that's where they wait until to share the best stuff. You want to get going, you want to get leaving, but now we have all the best stuff to share.
And then the alternative would be we're just sitting and staring at each other with nothing to say. That's not the most riveting comment.
So this is an Irish goodbye tree. Is that what you're saying?
Pretty much, Rick. You got it.
All right, let me run through a few things here. Number one, a couple of takeaways before we get out. So the next time somebody tells you that BlackRock or Blackstone or Wall Street or whatever they're calling it is the reason that housing's unaffordable, you can let them know that's not that simple. The data we walked through tonight tells a completely different story than the headlines. Rick, you're amazing. Thank you. If you want If you want to follow Rick's work, you could just turn on any news channel, but you could also visit CJ Patrick Company. He's at Rick Sharga on social media, puts out great stuff all the time. I see him on LinkedIn. Honestly, the best housing data in the country. Don't tell the folks at Zonda that and John Burns, but we appreciate you taking this time to spend with us and doing it for free. Papa Dan and Nona, appreciate you guys as always. Be sure to visit yourhome.academy for knowledge, strategies, and resources for home ownership, investment, construction, remodeling success. And for the rest of you still watching, if you own real estate in California and you're trying to figure out what your portfolio looks like right now, what your equity is doing, what your options are, whether to hold, sell, or restructure, that's what we do. So send me an email, cw@wireassociates.com. No pressure, no pitch, just a conversation like we had tonight. That's it. Thanks for spending an hour with us. We'll see you on the next Real Estate Disclosure. Thank you, guys. Really appreciate it.
Guys, have a good night.